Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. Today is Wednesday, 12th of April. It's just about halfway through this month. We had a big CPI report out early, first thing this morning. And on balance, looks like the headline number that they'll read in the newspapers and people will see came in relatively positive, 0.1% increase still. So quote unquote inflation is not going away anytime soon, but at least the pace is calming down. Your headline number you'll see in the newspaper will still read 5% annualized inflation. You can see how it came in about 1% lower than the previous month, and a little bit better than expectations. Probably the key driver here, though, Powell's talked about this lots recently, that the way that and you've heard Brian rant about this endlessly. Our shelter, our homes, the rents, home prices, that whole part of our economy has been securitized, and as a result, Wall Street has come in and aggressively just bought up all the homes and is trying to, squeeze the consumer as hard as possible, raising rents, inflating housing prices, all that kind of fun stuff for profit. And that is reflected in this core inflation rate. So in an interesting way, here's a really good example going forward. If you can remember this, maybe take a screenshot of this, write this down, this kind of stuff, where in a weird sort of way, the core inflation rate is actually probably giving you a more real picture of society's problems with inflation, with this securitization of our living quarters. Whereas, in previous generation, that just didn't exist. In fact, coming out of the Great Depression, they tried really hard to get the banks and the Wall Street out of the housing industry. And so as a result, and you've often heard that George Gammon guy, he can't understand it, but why was there no housing inflation? And why was that not a major problem for our societies through the latter part of the 20th century? And the answer was because they kept the banks the fuck out of the business. But now, of course, through the 21st century, George Bush, cronies, all that. You remember that joke of a society, the way that they basically just destroyed the fabric of our society. Now, we're all slaves to Mr. BlackRock Capital and all that crap. So, interesting how in the core inflation rate here, that housing component is still stubbornly strong. And in a weird sort of way, here's a scenario like what we usually see is like things like, you saw the lumber prices zooming up. You saw, crude oil prices zooming up, wheat prices, because of all these, sort of wars and sickness crises and stuff. That's commodity inflation. That commodity inflation is abated. I think the sickness, whatever you want to call that, is it's yesterday's news. The war footing, ironically enough, that's going absolutely horribly for Russia. So that's yesterday's news. And actually the Russians did something just absolutely horrible overnight. Terrible, terrible people. I don't know, well, what can you do? The things like housing, in fact, actually, they even say in the core report here, right? Food and energy actually is ticking down now, which should help alleviate that inflation problem. And I suppose you can kind of see that here. Did we actually M out? It's interesting how we've got this 0.1 print, and here we are 0.1 print again. It would be nice to see this actually break. And I think guys like Larry Williams and stuff who are saying that should we actually see a top in the inflation pressure, and that be like an old trend, and actually we're unwinding that. You see the stock market take off. I think the market really wanted this break here, and it just didn't come. And then if we look, of course, at the core rate, like we had said earlier, and Mr. Powell himself has actually said this explicitly, that it's because of things like the housing industry that this is staying stubbornly strong. So there's your backdrop. It was actually interesting in the TRI lounge. Somebody had posted this relatively late yesterday, which I think was a really cool graphic. But Goldman Sachs came out and said, well, if we get somewhere between let's say 4.75% to 5.1%, we're probably going to see the stock market up a bit on the day. On the actual news headline, the market jumped higher. Of course, they always say never trust the first hour of trading. And as you can see, I mean, this has been a very, very volatile session. Right out of the gate, the stocks were all booming up. And then they kind of rolled over and melted hard here. We had crude oil inventory numbers come out. Yeah, really, crude numbers look relatively benign. So much so that I actually took a short shot on my day trading plan against those highs. Unfortunately, I got stopped out, but it's the way a trader's life goes, I suppose. We had there's the inflation numbers. Then we had the EIA numbers. They came in relatively soft. I mean, nothing really sort of shocking the market here. Oil inventories actually ticked up a little bit, after remember past couple sessions we had pretty big drawdowns. Gasoline inventories basically flat after having big drawdowns as well. The summer driving season is fast approaching. I mean, it's interesting historically. What we should be thinking here is you buy your unleaded the middle of February, sell at the middle of May. You made money 9 out of the past 10 years. That's the whole commodity market peak theory heading into the spring. On balance, I think that's not outlandish, sell in May and walk away. I think that's basically on cue. The issue here, though, is that we're still in April. So we're not quite in the month of May. Could we push a little bit higher here over the next few weeks? Yeah, I suppose that's not unrealistic. Interestingly enough, the market actually absorbed that and felt relatively good about it. I think the big sort of unknown for the rest of today is in about, let's say about an hour and 45 minutes or so. Market's going to be getting ready for the FOMC minutes. My hunch is that the basic rhetoric that we've seen of late, now we have 3 components. It used to be cost push and demand pull. So it'd be like commodity price pressures often lead to workers demanding higher wages to offset the increase in commodity pricing in our society. Now we seem to have a third component. So cost push, what's the guy's name? Larry Fink? I think that's his name, Larry Fink. Larry Fink, dickhead move, and then a demand pull. Well, we're getting screwed at the pump, we're getting screwed at the grocery store, and we're getting screwed in our housing costs. So we want even more wages. Rawr. So I wouldn't be surprised if that's probably the sentiment that you hear. And like I said, that core rate's still very, very strong. I think a lot of people were kind of hoping to see that core rate start to melt back down. And because of that, the tweet that I basically put out, like I said, the problem here is this core rate. That's not, in fact, you could actually make an argument that this thing's actually ticking up, not down. So if it's ticking up, then what does that mean? Does that mean the Fed has to continue raising interest rates? They have to break this thing here. So I thought that was an interesting, the report that the tweet that I just said was, This was an interesting mixed bag from inflation data. So go figure. Anyway, there's your econ report with colorful language from Brian as well. So sorry about it. I haven't been sleeping very well here past couple of days. So attitude's a little bit crusty here this morning. My apologies if I'm coming across a little bit bent. I suppose another look at the CPI to understand the problem. We've talked about this lots. I think if they kept the CPI, and of course, if we look at the M2 money supply, you see exactly the same slope. So really, it's not really. I've actually posted in this Twitter feed Milton Friedman's conversations from the 1970s. He basically just says that, hey, the CPI is going to follow the M2 money supply. And it just, you can overlay these. I've shown you the M2 money supply and, the money printing, all that. So it's interesting how even theoretically we're supposed to be having quantitative tightening, but they can't seem to slow down this CPI here. It's still continuing to tick to new highs. And of course, this is the Americans. If you go anywhere else in the world, there's no fiscal discipline whatsoever. And of course, in my country, we've got substitute drama teachers running the show. They don't understand fiscal discipline. They just want to go out and get another credit card. Hey, let's go spend more money. We don't have money. Well, let's just make it up. Anyway, so the point here is that we were living in a world, ironically enough, when Bitcoin was sort of like coming onto the scene with the inflation slope along these lines, right, where my mouse is moving. And you can see since the sickness, the inflation slope has dramatically ramped up. I got the impression that the market was kind of believing that, okay, maybe we got in front of this thing and they'll start to bring this back down to trend line. But you can see that it's continuing to tick to new highs. And it's like we're still continuing on this slope. Very, very dangerous. So purchasing power of consumers definitely under pressure here, and I don't see that pressure abating. And so probably that helps inflation proxies. Fascinating though how the market is very actually that doesn't look like this is this updating? Usually this is jumping all over the place. There we go. So you can see market moving up, as we said. Goldman said that they were expecting on that graphic that we showed somewhere around 0.5% increase probably with this particular inflation print at 5%. Right? So they were saying up about 0.5% to 1%. I wouldn't be surprised if that's sort of the end of today's move here. Yeah, where are we? Here we are. So right now we got the S&Ps up about 0.33%. Yeah, it's pretty muted. Again, like I said, that core report probably has people sort of sitting there scratching their heads. And then, like I said there a few minutes ago, in about an hour and 45 minutes, we'll have the Fed minutes, and it'll be interesting to see how the market interprets what the sort of Fed's posture is. Generally speaking, across the world, you can see it's a pretty green day. So Asia actually started out of the gate, and usually Asia sets the tone for the day. And I don't believe anything you see out of China. I think that's all just a load of horse hockey. But data coming out of Japan, I think you can rely on it. It's fairly accurate. So good. There's that sort of 0.5, 0.5% gain. I think on balance, that's what the market's feeling. Interesting how Europe, again, same sort of thing, somewhere between 0.5% and 1% gain on the day. So, there's your backdrop. As I had sort of said there a moment ago, I mean, just all over the map, very, very volatile session. I did, like I said, I did have an interesting 4-hour level come in on crude. And those relatively, actually, this isn't probably the best chart to use. Relatively benign inventory numbers, and I actually did have a bunch of bear divs, so I took my shot and right up against these highs and got stopped out. It's trader's life, I suppose. Pretty big move there on the crude now. Remember, I've always told you that if you see a greater than 2% move on energy, or really any of these markets, that's worth noting. I got the impression, and maybe this was a bit of a rookie mistake on my part, because I got the impression that we were going to run up against some resistance against these levels to produce a little profitable trade, but the market's just blowing right through that. And now it almost feels like this, and actually it's interesting, I took this off the screen earlier, but it's sort of like this is a gap and go. So there to there, and I suppose you could argue now off of that low there to there, we're probably going to shoot up to about 85 bucks a barrel here now. And it sure looks like she's got a head of steam behind her, eh? So that's got the market's attention. Interesting, the gold market, and I've often talked to you guys about this. If you have energy moving up, probably odds that gold and the metals moving up at the same time are limited. So gold, and actually gold does look very sort of, hey, I'm running into resistance, candle body highs for trade location. Guys sleeping on the couch, they got relieved. So that little rally up into that high there, they were like, whew, get me out of there, sell, sell, sell. And so we've settled back down, and wow, sort of crude's got the ball. I can't imagine gold's going to do a hell of a lot here. And I suppose I might argue that if we break down through this, that'll be a big fat M, and watch out below. Stock market, like we said there a moment ago, very, very volatile all through here. And actually, I had a really nice little intraday short setup come in yesterday. I even tweeted it out that if I was going to teach a course on trading, selling against highs, buying against lows kind of idea, it was a really, really nice setup last night. It was small. I mean, it's a 4-hour chart. But sort of coming out of the latter part of the market yesterday, the market had rallied up into resistance and into the original, what I like to call the institutional fingerprint, basically where the bulls stopped the rally yesterday. And then, on the actual release of the data this morning, and unfortunately, I think Chris learned a lesson about having positions on through those CPI reports and big econ reports. You can see the absolute insane volatility that came in here. So generally speaking, not a good idea to have a position on through those releases. If we drill down to like a lower time frame chart, you can see how volatile this was. It was just all over the map. There's huge swings both directions. And unfortunately, the interesting thing here is that if we have the FOMC minutes coming out here, like I said, in about an hour and a half, an hour and 45 minutes, and the market interprets that negatively, we could very easily just, continue on making lower highs and lower lows here. I don't think that the bull is like substantially come back here. This is still technically a topping area. There's Brian's favorite fib. And look at the size of these wicks and tails. I mean, just all over the map. They're just running stops right, left, and center. Julian likes to talk about this as a PVP mode. I would say through that CPI report, they just literally went right after the stops, cleaned out that liquidity, and then boom, back down, cleaned out the liquidity down here. And then literally the day is almost like a non-event day. So go figure. Anyway, we're up 0.1%. My hunch is like that Goldman Sachs sort of screenshot I showed you a few minutes ago. My hunch is that the market will end generally positive. That CPI report was relatively positive, but at the same time, too, the core rate was a little disturbing. So I suppose that's why we're a bit softer here now. Actually, one part of the market that's really interesting right now, last night, we had our TRI secret options formula, which is just a funny name for how I teach the options people how to sort of look at options data. But we had our Tuesday Stock Picker Club meeting, and David, of course, was a great quarterback of the meeting last night. We actually went through a whole bunch of these, and you notice that Ford had a outside upside bullish key reversal come in. and General Motors had an outside upside key reversal, and why? And I thought it was interesting. The news headline, of course, Mr. Biden there has gone and laid out, I think they said, like historic EPA standards that automobile manufacturers must meet. And Ford's actually really embraced this, and they want to ramp up production of electric vehicles big time. Interesting too how they're actually retooling a lot of old plants. There's one plant in particular in southern Ontario, being Canadian, obviously that perks my attention, to I think it's like a $1.8 billion investment in retooling a plant in southern Ontario, Oakville, Ontario, to produce SUVs that are electric. So it almost feels as though, I mean, that it's far from profitable, but it feels as though the market, and this is one reason why I absolutely love key reversal signals, feels as though the market's trying to embrace this whole sort of electric move. And I guess the impetus from the US federal government there was the outside upside key reversal, very powerful signal there. So we were mulling over how one might participate in this. I think maybe we need, the problem is I don't really like to come in and buy a hell of a lot. I don't really want to buy stock. I don't really want to buy crypto here because we're so close to the seasonal peak. And if anything, if we have a moment, I got about 5-10 minutes left on this free video. We can talk a little bit about crypto and sort of fundamentals coming down the pike here soon on that. I don't know. I mean, it's awfully tough for me to come in and buy that. But at the same time, too, you can see the really nice bullish move here on the fact that it feels as though Wall Street is almost kind of saying, all right, these auto manufacturers, they're ready to start embracing this move to electric vehicles. As we said, we had a key reversal come in on General Motors as well. So, actually, I don't really necessarily think that these are, screaming buys, but nonetheless, it's probably worth paying attention. We had a long conversation about how you might participate through things like spreads and stuff with these ideas. Also had a couple key reversals. I mean, I guess it makes sense considering what's going on in Eastern Europe. But what was it? It was Raytheon, RTX, came out with a big bullish key reversal. And the market just absolutely loved that signal. Look how the market just jumping higher here. And, Russia just went and did something that it's going to be used by the West as a justification for somehow bringing these barbarians under control, or, somehow, I mean, it's just Russia's not helping itself with what they did overnight. I'm not going to get into it, but it was just absolutely horrible what they did yesterday. So, this just plays right into the U.S. big defense, what do they call it? The U.S. military industrial complex. There's your big Raytheon bullish outside upside key reversal. And this chart looks very, very bullish. I know, of course, a lot of people not really excited about going and buying defense stocks and military stocks like that, but like I said, Russia's not helping itself on the PR front. And I think that these guys are going to get the green light for a lot more funding. And I would imagine that they're probably very, very profitable with all the javelins and, whatever that they're shipping off to Eastern Europe. So anyway, I thought that was a really interesting signal that came in last night. We reviewed that. And, it's interesting to see the little junior stocks. We have this club meeting, and I'm actually quite surprised to see that there are names that are actually jumping violently higher. This was a main name that was reviewed back in March 21st. So that was right in here because lo and behold, I don't know whether you can see this or not, but what pattern is this? Nice bullish engulfing bar there. and right against the lows, reload zones. I mean, it's just textbook. And sure enough, boom. And interestingly enough, actually in crypto, we see this all the time. Crypto kids always get angry at me for stopping bull runs, but can you see how if you bought this thing down anywhere around 90 cents, what a surprise. Where did it stop? At $1.80, or basically a double. So I would imagine there's probably a bunch of sell halves on double orders up top there. And sure enough, boom, 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 they got filled. So the Stock Pickers Club, they're having a lot of fun. Beautiful charts. This was an interesting read. Basically, they're involved in the IPO business, and there's a big, I don't know sure who these people are. You guys probably know who they are. Yoj Baba. I'm not quite sure what the hell that is. But the point being that they want to go public, and these guys are helping them go public, going to get a huge big fee and also a whole bunch of warrants. So up and away. So there is that part of the market that seems to be doing relatively well here. On to the corn. As I'd sort of said, just insane volatility here through this CPI print. I almost get the impression that Bitcoin is to a certain degree following along the major indexes very closely. I mean, this is the NASDAQ, this is Bitcoin. They look almost interchangeable. But you can see Ethereum kind of bucking the overall trend here. Why? Well, they've got a big fundamental event coming up here today with the Shanghai event. And I did see this one good thing about the TRI Lounge is the community's on top of things. Shark Toshi, we even have a countdown clock, countdown to Shanghai. And of course, you can go on the internet and get lots of news about it. But in essence, a big fundamental driver here coming up for Ethereum. And my hunch is they're rallying this thing into that event. Interesting to see also too that the dominance, which we've been watching closely, actually went and emmed out here off of the lower time frame charts here today around that, implying, I guess, a bit of Bitcoin weakness, but Ethereum still relatively strong. So up and away we go. Spreads, usually when this is pointing down, that's bullish for Bitcoin price. If it's spiking up off a W, that's usually bearish. So as it stands right now, I'd actually be thinking that the crypto market's going to catch a bid along with the rest of the risk market here. And you can see the market's trying to come back. I said it a couple times. I'll say it again. I do think that on balance, you're probably going to see the equity market's relatively well behaved here into the end of the day. And we'll see how it goes. It is interesting also too to sort of validate that the equity markets should do relatively well, a la Goldman Sachs's call that if the CPI number comes in relatively benign, the market should be up about 0.5% to 1%. You can see that the US dollar index is coming off and testing its recent lows. And if we break this low, that's just going to be another lower high and lower low. And you can see the euros catching a bid, Canadian dollars catching a bid, which doesn't make a lot of sense because in essence, the Canadians actually left interest rates unchanged. And with that high CPI print, probably going to have the Americans wanting to raise rates. And Americans have higher rates than the Canadians anyway right now. So that's a little surprising seeing the Canadian dollar up as it is, but it just looks to me like the whole world sort of fiat currency system is catching a bid relative to the US dollar because I think the market believes that the propensity for the US Fed to really crank interest rates higher on that headline CPI report number is relatively benign. Let's see what the end of the day looks like following that FOMC minutes release later on in about an hour and a half or so. Altcoins, there are some really interesting names. I asked Siort if he could go and pick up a bit of this. I don't have an account on KuCoin. I think Siort is running an account on KuCoin. He's out of the Netherlands, so but I sure like the hell of the look of this clear pool. I don't know, but I asked him to just go take a nibble on this because it's down at the bottom of the range. If we get a W here, look at the beautiful bull divs coming in. And as long as I keep seeing these kind of charts in crypto, I can't imagine crypto breaking down here just yet. The irony of it all is that Bitcoin's still working these two darn bullish bot setups, just grinding its way higher. So there was this one that we've had for quite a while here, sitting at about 31,000. Then there was this newer one that came in at roughly 32,000. Then we got this incredible base here that came in through the weekend. And of course, pretty looking little W there, and boom, up she goes. Of course, that CPI print, along with the equity markets, has put in crazy ass shooting star, doji, Darth Maul candles, whatever you want to call it. I don't know whether that's topped out or not yet. I mean, I suppose now that these levels have been hit, if you do get any sort of well-defined M top, maybe you just want to hop off. I don't know, it's a tough one. But she still just keep grinding higher, and you got to be cognizant that there are a lot of the social media influencers. This move down here was caused by a social media influencer freaking the market out a bit. You might have some more social media influencers come out and do some funny business up here. I will say also too that the weekly Bitcoin chart is still pointing higher. I mean, there's nothing really that's changed here. If anything, we went through a very powerful sort of 3-week consolidation process, which, you could argue that's building up a whole bunch of energy in there, and you could probably do fog and bombs off of that. But I think I'm going to leave the crypto analysis and looking. I mean, like I said, there's a bunch of names that look, there's green coming in on the board here. But we're going to have a Coinigy show tonight, which we haven't done in a very long time. Super excited to get working with the Coinigy boys again. We've got all the charts all ready to go with Brian's favorite indicators and and of course, I'm watching Ethereum. Are we going to smile here? All that kind of stuff. So that's going to happen at 5 o'clock Pacific time, which is 8 o'clock Eastern time. My apologies to any Europeans. Can't make everybody happy all of the time. Coinigy, of course, is based in the US. So we're going to try and do it at a time where most of the North Americans can participate. Of course, all you diehard traders, you don't sleep anyway, right? So you'll be up through the evening if you want to watch that. Maybe check it out tomorrow if you're over in Europe or Asia. But super excited that we're going to get the BAT shows back up and running. And actually was even putting out tweets. And if you are watching this through the day and you'd like us to look at a particular coin, we'll spend an hour or two going through looking at both Bitcoin and Ethereum and, Shanghai and what's happening with GOX and the whole thing. And also specifically what I've asked is, can you respond to these tweets and these public messages and stuff just with a simple, can you look at this? Can you look at that? Can you, give your opinion for whatever it's worth on this and that? And actually, I do see some people actually starting to actually ask for specific coins to look at. I can't find it just off the top of my head. So, look out for that tonight. Should be a lot of fun. Joe over there at Coinigy is getting all ramped up and has OBS and all the Zoom calls and everything all ready to go. And of course, the interesting thing about all of this is that, and I can't show you because I just don't have it off the top of my head, but we had actually done some update videos for, now what have I gone and done? For Coinigy using their sort of updated platform on fibs, and you can see I'm still sort of getting used to the platform. Anyway, we'll come back to it later. A whole bunch of fib studies, extension studies, and I actually came out with some upside objectives based on chaos theory. And I suppose I'll use Coinigy charts tonight, but I'll just show you here on the weekly Bitcoin chart. It's interesting how all of these. This is an extension study. This is a fib study. This is a chaos theory study. They're all still pointing up to here. So if anything, I was quite pleased, and we'll go through sort of review all this tonight, seeing how the market is actually doing basically what all the fib studies suggested was going to happen. So go figure. Okay, so I think that's your summary for today. We'll pop on over and have an extended conversation in the after party. Chris has a whole bunch of topics that he'd like me to touch on as well. That gives you an opportunity to ask some questions. We do have daily briefs requests. So put it all together. We'll have another half hour, 45 minutes of chatter in the after party once I've done talking here. Can Brian stop talking? That's always a tough question. All right. Have yourselves a great day. I look forward to seeing everybody on the Coinigy site here in North America and on YouTube for that show. Be sure to post all your coins that you'd like us to review. Be more than happy to just go through one by one, give you my 2 cents, identify W's and M's and divergences and trade locations and all that kind of fun stuff. PMA for the win. Try and deal with Brian's saltiness, and try and have yourselves a great rest of your day. Other than that, have yourselves a great day. All the best. Only left for Brian to say is bye for now.